Hi everyone, so welcome to Investing for Value. So today I want to talk about Square. So Square is a payment platform used by a lot of businesses. So currently share price is $61.09 and it gives a market valuation of $26.5 billion. So we'll look at the share price. If you brought in 2016, 2017, you would have done really well. Even 2018, though it started to peak around that stage. Obviously a lot of aspirations were built into this company, though we can look at the last 2 years and the share price has not done as splendid as we would like. Overall it's a bit of a downtrend, though if you brought at these bottoms and you saw it at the top, you would have done very well. So it just depends, but if you were a long-term holder in the last couple of years, you probably would have been a little bit disappointed. And yeah, that's more or less, what the expectations are. So the question is, if you're a current holder, should you continue to hold, or if you're a buyer, is this a good share to be buying? So we look at Square as they are right now. They've got a seller ecosystem, so they've got the hardware for card readers when you attach it to your phone and you can just be portable, or you've got the online software. So you've got more or less those things, and it's just it basically, if you're a business and you're trying to sell something, Square could basically offer a product that would suit you. We can go through some of their products in a minute, though we probably won't spend that much time, because at the end of the day, payment platform, you kind of understand more or less what it does. So last year they processed 106 billion in gross payment value, so a lot of money has gone through in terms of like sales through their customers, which is always nice to see. There was 2.3 billion card payments from basically 407 million cards, which is quite a lot. If we go every card as a customer, they've got about their customers have 407 million people shopping and using the platform, which is quite good. And then they've got the Cash App, which provides financial products and services to help individuals manage their money. So that's also the up and coming side of Square, where they've got this Cash App that can just help individuals, especially small businesses. So you can already understand that Square is basically very good if you're a small business and you're providing a good or service. Initially it was with the card readers. With the card readers you can make payments anywhere. Big business wouldn't really need that, though small businesses do. And then now they've understood that, hey, we've got the extra capability to build out this platform and make a big ecosystem. So in a way it's very good how they've built this out. In terms of where the sellers are, you can go United States, Canada, Japan, Australia and the United Kingdom, and they're growing very well, so we'll see the numbers quite soon. I'll come back to this chart very soon, though I think we'll just go look at the numbers. So 2017 was 2.2 billion in revenue, which they were growing about 29.5% from the prior year, and in at 2018 it was 3.2 billion, and which is represented about 48% on the prior year, which is very impressive. And then you kind of look here, and in 2019 it jumped to 4.7 billion, which is also very impressive, particularly on the big numbers, and that was representing about a 43% jump in growth. So even though it's kind of declined in growth by a little bit, 43% in this current situation is still very impressive. And how did it translate down to the profits? Well, 2017 was a 62 million loss. Then they managed to regress the year after to 38 million loss in 2018. And in 2019, it says 375 million here, though this includes the sale of their Caviar assets to DoorDash, and then they kind of recognize the profit from that, though it's an accounting profit in the scheme of things, because it's just a one-off, so we don't really want to count it, because we want to look at what the long-term sustainability of this business is. And if we minus the 3 off this 375. We're more or less looking at 2 million in profit, which is it's a good sign, because you're looking at this company that was making quite a lot of losses prior to that, and then now they're in the break even to profit situation, and they're still growing very strongly. So I think currently, given the current situation, they should be still a profitable company going forward. So we look at the financials of this company. They've got $1 billion in cash, and if we look at the loans, the current liabilities don't really show any loans to be worried about. So it's just more the long-term debt that they've got 938 million, though that's the long term, so they have many years to be paying that off, so I wouldn't be too fearful of that. I think overall this balance sheet looks fine. Business is still running because they're still processing through online, even though some of the physical stores won't be. And then we can look at basically, the current finances in terms of revenues and net profits, and I'd say company is still growing at a very, very good rate. They did do an update on their first quarter, and they did say January and February still, did very, very well. As you can see here, January and February, this ecosystem for the gross profit was up 32% year on year, and the Cash App, which is still quite new, is up 118%. So you can see the Cash App is extremely it's going very well with the Cash App, particularly right now when a lot of businesses are, kind of having to manage their cash flows a bit better than prior years. Cash App's going to be a huge, huge advantage, and a lot of people will probably start using it just to know where their cash flow is going, especially right now. So then we can look at the expectations. So they're looking at about 1.3 to 1.34 billion dollars in first quarter revenue. So if we it's tracking it right here, the prior quarter, like the first quarter for 2019, brought in about 959 million in revenue. And then we look at this situation here, and it's this quarter will be 1.3, so that represents around about a 35% gain on the 1.3, which is still very, very good growth, because remember last year they're growing about 43% from the prior year, and then now that are including March, which they said was not doing very well. So as we see here, the beginning of March was in line with the company expectations, though the gross payment value declined by 25% year on year. So the transactions that went through the company for the customers was down 25%. So we look at this chart here for the gross payment value. We can see that 26% is from food and drink, and 17% is from retail. And then we look at healthcare and fitness being at 9%, and beauty and personal care being 11%. Whereas professional services, I think that that's still going probably strongly. It's only these four sectors that tend to be more physical, and also they're very large sectors in terms of the revenue that this company does. So we go in March, it dropped off by 25% in terms of the payments that went through the system. And it's likely because of food and drink and the retail and the beauty and personal care. And if we look at here, it's about 42% for this part, 32 parts here, and then add in here it's about 54%, and then add in here it's about 63%. So about 63% of the payments that go through a system has a high exposure to being very affected by this current situation. So that's kind of what we're being a bit fearful of. That they said in March there was a bit of impact, and you could probably expect in April, even June and even July, that this impact's going to be coming in. So even then, it's obviously January and February held up very well, and you're now looking at gross profit in the range of 500 million, which is very impressive. So I do like the numbers in terms of this. Like it's, yeah, like I like the numbers here, I like the growth rate. Though as they were kind of signaling here, March, was going to be a bit down with that 20. Like if March was, if January and February was doing well, and in March it was impacted, and it managed to bring it down by 25%. I think there's a bit of short-term pressure for this company. So in terms of the share price, I think the share price is a bit high, given that this business is probably going to be impacted fairly heavily on the customer side of things. So it's still growing very well. And I think the Cash App's going to do very well, particularly with its customers needing to use that. So yeah, I think at 61, I think it's a bit high because it doesn't really give you a bit of margin of safety. So you might want to consider that, hey, this is a good company though. At this share price here, it's probably a little bit too high, and you probably want to consider maybe round about $40 just to have a bit of margin of safety, so that 60, as even here it's a bit downtrending for this company, and given it's only at 2 million profit for a $26.5 billion company, and growth is slowly declining. If we count that this year is about 35% growth, even though March was impacted, yeah, we kind of say you want to buy at a bit of a margin of safety, or else it's not looking too good. And as we kind of saw, since they're technically at 2 million profit, that this PE ratio of 75 is actually significantly higher. And the big question is, like, if they did manage to grow like they grew here, what would their profit have been? So the question is, given how productive they always like to spend proportionally in product development, sales and marketing, then I'm gonna say, yeah, like given here where revenue jumped about 1 billion, and then it was about 20 million that it kind of brought in positive cash flow, and in here using the 2 million profit number, that it jumped by 40 million when it jumped by 1.5 billion. So if we say growth is going to be a bit slower, but we're still going to go, it's going to still grow by another 1.5 billion, and probably in about 6 billion in revenue, then we can kind of look at the situation and go, hey, they're probably going to make about maybe another 40 million. So I'd say their profits probably going to be about 40 to 50 million, which will still be very, very good. Though PE wise, it wouldn't be that flash. So that's why I think the valuation's a little bit high, particularly in this environment, that there's actually a lot better opportunities to be buying into, whereas Square has a bit of exposure to the small business area. I think that's going to have a bit more pressure than other areas. So I think right now probably isn't the best time to be buying. I would buy if the stock price came down closer to $40 rather than $60, which leaves you with no safety net. And you also have to consider that the founder and CEO Jack Dorsey just offered to donate $1 billion of his own money. So, and he's looking at this data for Square, and he's seeing the big problems that are coming on. So he's donating money because he sees it's a necessary situation to be donating the money. So if he's seen the data and he's donating his own money, obviously I don't see the future being as bright for Square in this current year, though next year it could just pick up and do very well again. So that's why I'm saying buy at a lower price if you can. But that's just my opinion at the end of the day. I'm always interested to hear what your opinion is, or if you've got any stocks that you would like me to look at, feel free to mention them. Or if you've got any other comments, I'm always interested to read what everyone else thinks. Until then, I wish everyone well and good luck investing.